We'll go live here at 12 o'clock. Everybody just getting everything, just letting you know we're up and rock and roll, but we'll get started here at 12 o'clock Central Standard Time. Hey, Laura. Happy Friday. Yep. We'll get started in a few minutes, everybody. Hey, Renee, good to see you again today. If you're watching live on YouTube, hey, welcome. Let me know where you're from. Same thing if you're watching here on live on Zoom. Feel free to share what part of the country you join us from. We'll get started here in about 2 more minutes. I went live a little bit early just so folks are ready to rock and roll. I am monitoring both the Zoom chat and the YouTube chat as well, too, folks. So ask a question. We'll try to answer them as we go throughout. We break this down today. Awesome. Hey, Don, good morning from Dripping Springs. Dean Meyer tuning in from the woods. Is that Woodland? The Woodlands in Houston? Renee asked a question here. For these non-performing loans, are they servicing retained or servicing released? You can servicing released. You're ended up buying these. No, when we make offers on them, we'll probably move into our existing servicer who's a little bit cheaper than the existing. Okay, but good question. Nope, the forest. Oh, you're in the woods. Okay, you are in the woods. Well, what part of the country are you out? Deer hunting, quail hunting? Birchwood, Wisconsin. You're probably a little bit colder up there. That's awesome, Dean. Well, happy hunting, buddy. That's awesome. People from all across the country join in. Well, that's part of the reason we like to live stream this on YouTube as well. Alfonso, hey, out in the West Texas town of Old El Paso. Thank you for the comments. He said your video yesterday was gold. I really appreciate these, Scott. No problem, everybody. Hey, we're just trying to help everybody out. Our goal is to get people making more and more bids, and that's the only way you get ahead in life is making offers. And sometimes we can be very intimidated by these tapes. I've seen it happen many a time. And just want to show you guys kind of a way, because I don't think a lot of people do this, and we like to take the time to do this and help everybody out, not just our students and our coaching students. I mean, we do this pretty regularly, as I think Laura can attest to on here, but especially our one-on-one and our WCN memberships folks. But we're here to really just help you guys achieve success as best we can. If you're not buying from us, that's totally fine. Buy for yourself direct. But that's the thing, ladies and gentlemen. There are plenty of opportunities out there for everybody. Good morning, Timothy. What's Timothy from Northeast Ohio? Glad to have Ogden. So it's good. We got people across the country. All right. Well, now we're couple minutes after the top of the hour. We'll get rocking and rolling here and try to stay on track. We'll take a short little break about halfway through at about 1:30 my time, and then we'll restart now. If something weird happens along the way, yesterday we had in the last hour we had the power go out here briefly for a second, which kicked the internet off, and so it took a few minutes to get back up. But yesterday's video is on YouTube. We'll restream that again probably tomorrow morning early, leading up to us breaking down the 60 notes yesterday or tomorrow, and then we'll restream this probably Sunday morning just to keep everybody on track there for you. So give me 1 second here and we'll get rocking here. All right, everybody. Well, hey, good morning, good afternoon, good evening. Hey, welcome to the next We Close Notes tape breakdown as we dive into evaluating 172 non-performing first liens that we've got in from a major servicing company. This is one of 7 tapes that we got in back on Sunday and Monday of this week. And yesterday we broke down 292 to finalize 40 bids that I'm submitting in. And hopefully a few more bids are coming in today from our WCN crew members and our coaching students. So hopefully we can get up to 50, 60, 70 bids in off that 292 to the asset manager at the servicing company who I spoke with briefly yesterday. So if you're joining us for the first time, hey, welcome. If you're watching us live stream on YouTube, make sure you hit that subscribe button to the channel so you're alerted of new things that pop up. And if you're not subscribed, you can very easily just go to weclosenotes.tv. You'll see a subscribe button pop up. Make sure you hit the subscribe button while you're there so that you're alerted of all our live streams like this, our podcast episodes, our videos, our trainings, our Note Night in Americas, and all my great stuff there for you. But anyway, let's get into this stuff today, everybody. One of the great things, we like to map these notes. And here's a bit of the map from today's list. Yesterday's list was 292, which was we were only able to map 250 of batch year, but all 162 were able to map today on this tape breakdown. So you can see quite a chunk of stuff throughout the Southeast Conference, east side of the country, a little bit on the west side up in Washington State, up kind of where Laura is joining us from this morning. Okay. And one of the great things, ladies and gentlemen, there's a variety of stuff. So this list was actually pulled January 3rd from the servicing. We actually, one of the great things is this was part of a list of like 422 notes originally. And I reached back out to the seller on this list and said, hey, what have you sold? What haven't you sold? And he had actually sent him back out again about a week or two ago with 185. And he came back and said, oh, we got a few offers on these, but not as much as I was expecting. So this was actually relatively recently. It is serviced with a major servicing company. We won't tell you who it is. And it's quite a big difference between actually some current assets that are actually current to all the way being defaulted or stressed by over 20 years. There's even one that was from 2002. Why they haven't foreclosed, that's a different story for due diligence. But we probably won't spend much time on it, but we will take a look at it briefly and going from there. Bids are currently being accepted. They're not due today. If you're interested in wanting to submit some bids, let me know. We definitely in. We only provide the tape though, because we've signed an NDA with the servicing company. We will only send the tape out to our current WCN students, which they've received those since Monday, and our one-on-one coaching students. Now, if you'd like to see what is all involved with our monthly WCN crew, you get access to training, all our online workshops, past workshops, replays. We do Monday coaching calls. You can also schedule calls with me one-on-one throughout the week, but you can go to noteumbrella.com. If I can't make you or save you $97 a month, I'm doing something wrong. But well worth it. Biggest bang for the buck in the note industry. The only limitations, the only thing we don't cover is our one-on-one coaching in the WCN crew. And when you sign up, we do ask you to be a part of it for 6 months, just because of all the content we give. But it's designed to spread out your coaching and training over a very affordable amount per year. But anyway, like I mentioned earlier, we discussed and broke down 292 non-performing notes yesterday over 3 hours. That replay video is up on YouTube already. We'll cover the 172 today, and then tomorrow on Saturday, we'll go through 60 performing notes that are available as well that we're working through too. So just to give you a bit of a, kind of that's where we're at. I also highly encourage you guys to check out our most recent Note Night in America webinar that we held Monday night, talking about how to get deals from servicing companies. You can go to notenightinamerica.com to RSVP. I don't know what we'll cover this week. Probably something to do with your own note Super Bowl is what I'm thinking. Or maybe like your SOPs, your standing operating procedures, thing to look for, stuff like that. I think is always a good thing for folks. But like I said, we've been hosting Note Night in America for over 13 years now. notenightinamerica.com is the link that'll take you to the Zoom to register for it. Once you register for it, you can attend all of them or just what you want to. But let's just say we'll get rocking and rolling here. We've got, great stuff to go through on this stuff. And like I said, I encourage you guys to ask questions throughout today's live stream. Now, I'm going to ask you to keep your questions relevant to what we're going to. I'm not going to go through raising capital. I will answer specific questions about why specific asset or, sharing information that's on the tape. I'm glad to share what I have, because what I have about each asset is exactly what I see on this tape and what I can find through like public records, taxes, appraisal district, stuff like that, and doing a little due diligence online. So the whole goal for this is to help you guys understand when you get a tape in, how to filter through it to find the deals versus the duds. And deals and duds can have loose meanings depending on your individual strategy. If you only want to buy in Wisconsin, by all means, that's great. You're buying in your backyard. Totally fine with that. Or out in the woods, like one of our friends, like Dean is sitting in the woods this morning watching. I don't buy in Wisconsin. I think the property taxes are a little too high to make it affordable in a lot of cases. I don't buy in New York, New Jersey, because the foreclosure timeframes are so long in those states, and it's such an unfriendly markets to foreclose on or evict anybody. Now, I do buy in Florida. It takes a year there, but it's also a hot market. I buy in South Carolina, which is a year-long foreclosure timeframe. I'll buy in Ohio. I buy in Michigan. All right. But we'll always put eyes on an asset to make sure it makes sense. My primary strategy, which is, you'll see me go through this, is to buy assets that are occupied, preferably, that I can get reperforming. That means reaching out to the borrower, using our servicing company, our attorneys, our contacts, our voodoo that we do to get the borrowers back to the table, get them to paying on time, and working to either reinstate the mortgage, modify it, hold it for a period of time of 12, 24 months of cash flow, and then determining, depending on what's going on with the asset, of either keeping it for cash flow or then turn around and selling that reperforming note back to the market. If you are interested in making some offers, feel free. You can always book a call with me at talkwithscottcarson.com. That's talkwithscottcarson.com. That takes you directly to my calendar. If you'd like to schedule a call with me next week, you can. If you're looking to put some money to work, let's talk. We've got some different opportunities of either us or even some of our one-on-one coaching students have some really great deals that could be some great funding opportunities for you out there as well too for you. So without further ado, let's pull up the tape. I'll share kind of what's the information on it so far. And then my goal is right before we hit, or right as we hit the halfway point of this 3-hour live stream, to really have identified really what I like. And then that way, then we can do the second half is more a little bit of due diligence initially on those as well for you. So helping you determine what's going well. Like I said, I'll look at preferably occupied assets that get reperforming. That doesn't mean I won't look at vacant assets in a few states or a few markets that I have teams in. Currently foreclosing on a couple assets in Florida, Texas, Indiana, Ohio. But we always prefer the cash flow aspect. If we can keep the borrower in there, great, and that's a true win-win, and usually the highest bang for buck for us out there. So you don't need to have millions of dollars to be investing in notes. You can get started with other people's money. You can get started with your own funds, your own IRA account. 50 grand, 100 grand, stuff like that or more can get you the ball rolling. But there's plenty of private capital out there for you to use as well for you guys. So let me share my spreadsheet, and we will dive into the information as we share kind of what's going on here. So as you can see, this information on the spreadsheet was pulled as of January 3rd. Here's the loan numbers. Now, what was really nice is that the asset manager at the servicing company, they sent me over their highest offer as of today, which is nice. You can see how you kind of need a bid or what you need to bid if you were going to win that bid and where they're at. They gave me the principal balance. That's the UPB, unpaid principal balance. They give me the estimated total debt, or as we would say oftentimes, legal balance or payoff amount. Your legal balance is usually going to be the amount that you're able to foreclose on, or your highest bid at the foreclosure offer, and if you wanted to foreclose on the asset. Of course, we have the street address, the city, the name, the state, zip, property type, the valuation dates. These are all from over a year old, so we know the values have changed. Some gone up, gone down. State stagnant, it's going to vary on a state-by-state basis out there. Original loan balance, original loan date when it was originated, when the loan matures. Okay, mortgager's first name, middle initial, last name, mortgager's first name, middle initial, last name for the co-mortgager, co-borrower. The delinquency class code, if this is a conventional without private mortgage insurance or land contract. When the next payment due date is. Some of these are going to be pretty light, anywhere from current to, like I said, 2022, or sorry, 2002 was the oldest one I looked at this morning on here. The interest rate, the totally monthly payment, the P&I amount, principal and interest amount, which is an important one. So we're going to highlight that one in green because we're going to be looking at that. Taxes and insurance monthly amount, that's good to know if it's in there. Any city tax, county tax, lien amount, restricted escrow balance, reserve replace amount, or replace reserve amount, any suspense balance, last full payment date. That's important. We're going to bold those because you can kind of see how, like this one, January 3rd, the bar just made a payment, which is pretty good on that one. Escrow advance balance. A lot of these are going to be taxes or forced place insurance has been advanced. You can see the escrow balance sitting there where they've been, where taxes and insurance are escrowed and they're holding on to that. The last analyst date, I'm sorry. This is the last basically time that they've really taken an opportunity to look at the property. Okay, and you can see some of these: 2021, 2022, 2020. Some of these have been a while since they've really taken time to analyze it. Interest balance due, loan mod date if the loan was modified, the lien position, if there's a balloon, the note date when this was originated, the loan matures date, the first due date when the first payment. If there was a bankruptcy, the status code, current or active. If it's a 13 or Chapter 7, when the bankruptcy was filed. How much the bankruptcy pre-petition remaining balance was. If there's a Chapter 7 discharge indicator, the mod effective date, and the interest paid through date. You have the occupancy, which, whoops, got a little crazy there. It's owner occupied, vacant, secured, vacant, non-secured. Recoverable corporate advances, that would be anything that's been paid by the lender or servicing company. It can be recovered, like taxes or forced place insurance. Any third-party corporate advances, that could be like your any maintenance to property, lawn mowing to avoid weed lien or anything like that, anything like winterization, stuff like that. Non-recoverable corporate advance. And then the foreclosure status, which is pretty important. You can kind of see if they have started anything. Like this one was file referred to attorney in 2019. No foreclosure action is started. Blank means nothing. First legal actions usually means that there was a letter filed, default letter, demand letter sent. That's about it. And you can see if anything else. Now, yesterday's we also had if there was a foreclosure date in some of these. So it's a little bit more updated. But this tape's been around for a little bit. I'm not going to go through who the seller is. But what I'm going to do right now is I'm going to go and kind of shrink down this tape. Stuff that I don't need to look at. Stuff that's just going to drag it out and some duplicate information I don't need. Like we don't need the as of date anymore. I'm just going to hide that. Okay. The loan data number, will need that. Highest, that's good. Principal balance, estimated property is good. One thing you want to be aware of when you're looking at a tape like this is if there's a mailing address, go ahead and hide the mailing address so you're not making the mistake of making due diligence off of that. I'm going to go ahead and hide the valuation date. We all know that, that's the valuation of the property, not the actual estimation of the file. We're just going to hide that because it's all Valuation amount, original loan balance is important. Loan date, maturity date, mortgage's first name. We're going to hide the middle name. And we're also, we're going to actually, hide that. And then we're going to hide the co-borrower info as well, because there's no reason to keep them in there for the most part. All right, we're going to hide that. The delinquency class code, that's nice. Next payment due date, that's important. And what's great is that if we didn't have the legal balance, then what we'd have to do is go back in and say, okay, how many months behind is this borrower? And taking the P&I payment and multiplying that times the number of months behind and adding that to the unpaid principal balance to figure a rough legal balance. Okay. I'm going to shrink down the interest rate and just say interest rate. Some of these I'm going to shrink down because we don't need it to be so wide. Tax insurance. I'm just gonna hide some of the suspense stuff because it's just gonna be stuff we don't need to look at right now. There we go. Escrow balance. We know that these, that's fine. As I said, these should be all first mortgages. Yep. Since they're all first mortgages, I'm just going to hide that column. Not really worried about the balloon. There's a few on there, but they're probably way past. So we're going to hide that. So maturity, first due date, BK status, which is good. BK acceptance, if there's anything in here with a discharge date. All right. Yes. Modification. Nope. No modification. Effective dates. Just pay through. We have occupancy, which is good. All right, so that's a pretty good start there. Okay. One thing as well too. I just want to make sure. Let's go ahead and highlight. Let's go ahead and stretch that out a little bit. We're going to bold that. All right. So the first thing I like to do when I'm looking at a spreadsheet like this is I want to get rid of stuff that doesn't really fall into my buy box. And what I mean by that means I'm going to get rid of states that I don't buy in. I mean, I'll look at just at stuff everywhere, but for the most part, there's just a few states that I really don't like for the most part. And it's either A, because of longer, foreclosure timeframes, huge property taxes, and maybe there's a weird rule or two or law, like I'm not going to buy a lot in Portland, Oregon or Washington State. No offense to my friends that are up in that neck of the woods. It's just that when you need to have a separate mortgage broker's license to buy notes up in those states and they're still through the roof, there's no reason really time to waste my time when I can, for what I would buy something in Oregon or Washington State, I could probably buy like a block in Kansas City or a block in, Columbus, Ohio in a lot of cases. So I'll also, a lot of times I'll look at the values of some of these assets and the higher valued assets, unless it's in a Texas or Florida for the most part, a few other places, I'll go ahead and get rid of it. I'll also do the same thing on the opposite side. Low valued assets, usually below $50,000. I'll go ahead and remove those a lot of times, along with low UPBs, low monthly P&I payments, stuff like that. Yeah, that's what all comes down. And then I'll also get rid of sometimes property types like, I'm not worried about mobile homes, depending on where they're at. Multifamily can be good. Condos, I don't mind so much. We'll look at some of that stuff for sure. Now, let me make sure and freeze my panes so that my headers stay where we want them to be. Okay. All right. So let's get rid of the states we don't want, because we'll cut it down. Remember, we're at 172 right now. And let's get rid of a big chunk of stuff we're not gonna waste our time on. All right. So I don't mind Alabama. I like, Arkansas, and I got a coaching student that looks in Arkansas. Florida's great. Georgia's great. Iowa, I'll take a look at. It might be a little further north, but as long as it's not rural, we'll take a look. And that's one thing I'll look back at. Once I go through the states I don't want, I'll look back at the cities that I have. If I don't recognize the cities or the addresses end up being very, very rural, I'll kick those out too for the most part, because I want to be investing in areas where there's plenty of people to buy, plenty of realtors to help out, plenty of vendors to help out as well. So that's one thing that you just because you might get a good deal, you got to also look at what's available to help you. Okay. Louisiana, I may get rid of just unless it's in Shreveport or New Orleans. Or Baton Rouge. Those are really the three primary cities I look at. I'll also look at Alexandria, Louisiana, and where's the casino at? Lake Charles. I'm not a big fan of Maine. Maine's often pretty cold. Let's see, New Jersey. There's nothing in New York down here, which is great. Oregon, there's that one. Virginia, okay. Washington State, Wisconsin, and West Virginia. West Virginia just doesn't have a lot of the bigger cities in it. Wisconsin, hey, you have to put, like I said, the property taxes will often kill your deals in a lot of cases, especially if they're behind by a couple of years. So there we go. Now, that gives us a pretty good chunk of stuff already to take a look at. So I'm just doing a quick review here. Alexandria, it is a longer foreclosure process. Hesmer, Roseland, Kaplan, just kind of identifying. Centralia, Washington, I don't know where that is. It's a prefabbed home, so it's a modular home, which is okay. It doesn't mean it's bad. Let's see here. Livingston Parish, there's one in Baton Rouge. Okay. New Orleans, we may take a look at that one. I'm going to be out there later this year. So, all right, so we can get rid of some of this stuff. So let's go ahead and start going down here. We'll go ahead and delete those. I didn't want to move it. I want to delete it. Come on. We're not delete. Well, now let me delete any of these. Oh, it will. Okay. I'm going to have to delete these one at a time. Well, that's no good. Well, let's do this. We're going to do one other thing here. Hang on, make it much faster for us. Basically, I'm putting K for kill, except for the ones here in Baton Rouge, New Orleans. And then there was another one up here that was in Alexandria. Sometimes when you get a spreadsheet, they're going to put limitations on it sometimes of what you can do. All right, so now that I got this, I'm going to hit OK. I'm going to put all the states back. I'm going to custom sort it by column 1. Oh my goodness. Let's do this. All right, so I've got to do something else here real fast. Sorry, folks. I'm going to, let's do this. I'm going to copy. I'm going to go over and paste this into a new spreadsheet. There we go. All right, so sometimes they're just a pain in the ass. Okay, that's better. Now let's custom sort. All right, so now we got rid of that. Now we got rid of the states we don't want right there. We're gonna filter everything again. Perfect. We're gonna bold some of the stuff. Put dollar signs in it. We're gonna filter some of the stuff in with green because we know we're gonna come back to it. We don't need the as of date. And delete that off. Some of this, when you see a valuation date where it's 444, it just got to be, it means you've got to format that cell for a date. There we go. Dollar amount, dollar amount. Maturity date. Hide this again. Some stuff that we hid and we got to go back and rehide. And I'm sorry about that, folks. I probably should have messed around with that a little bit more. Didn't expect it to do that for us. So totally monthly payments, P&I payments, what we want to hide that, or we want to see that. Bold it. There's some stuff. I got the original spreadsheet came from the servicing company. That's where it came from. And they put sometimes they put some filters on it or some things that they don't, rules didn't like filter or delete. They're trying to keep it simple for me, I guess, in some cases, but that's the reason it was giving me a issue. I should have known that because it's done it a time or two with me. And I've always had to go back in here to make it easier, to cut and slice and dice. All right, now we've got that fixed. A little hiccup, but it happens, right? A servicing company is a company that's going to handle your borrower outreach. Most states require you to have a licensed debt collector in that state to be able to buy notes. If you are not licensed, then you most of the time, if you have a third-party servicing company, that's the company that's calling out, collect payments, sending statements out. That's working on your behalf. That will suffice that and allow you to avoid having that requirement for a license. There are a few states though, like Washington State, Oregon State. I think even Massachusetts requires you to have a servicing license. A few states want you to be a mortgage broker. You know what I mean? Which is a little bit more intense. John asked a question, why did you keep New Jersey? I didn't keep New Jersey. I got rid of New Jersey. I was selecting it off on that list so I could select the states that I wanted to get rid of and delete them all at once. So hopefully that makes sense for you, John, why we initially selected it so that we could delete off the ones and keep it a clean thing. So now let's go back here. We've kind of got rid of the states that we didn't want. What we want to do now is go over here and look at the monthly P&I payment. Okay. So we're going to custom sort this and we're going to go over to the P&I payment. And we're going to look at smallest to largest. Now, why do I slice these? Why do I refilter this? Because the thing, most of these are going to be non-performing stuff. Okay. Now, if you're a note investor, that's the whole goal, is to get cash flow, right? But you're still going to have servicing costs each month. So if it's a non-performing note, you're going to have, most of you are going to have a servicing company is going to charge you $90, $95 a month per non-performing note. Well, if you've got a note that's $100 or less, you're really losing money. Okay. If it's a performing note, okay, you can get away with it. But if you're using your own funds, that's totally up to you what you want to do. But if you're using other people's money, I like to at least look at mortgages that have at least $250 a month or more coming in. All right. Now, there's servicing companies, once a borrower is back on track and paid 3 months straight, they'll often reconsider a reperforming note. So it drops the servicing cost from 90 down to like $25 a month. Okay. But that's the thing. You don't want to get into making an offer on a low value to low UPB mortgage that's got a really low P&I payment. You'll lose money on that. And you don't want to do that. So let's go over here. P&I payment. Here you go. What does that say? 0? That's interesting. What's this one from? This is from an LLC. This is, where's this at? This is that condo. Well, we'll keep it and take a look at it. But you see like 61, 81, 155. So I'm going to literally just go through here and delete everything below 250 for the most part. I will kind of look at some of this stuff. Yeah, a lot of this stuff is, yeah, I'm just gonna get rid of it all. Except that first one in New Orleans, it's not the right information on there. It didn't have the P&I payment. It's at 730, so I'm willing to bet it's a little bit higher. So we're just gonna go down here, boom, down to anything below 250. Well, first we'll do below anything 200. Okay. And then we can always go back and cut and slice that more. Okay, so we got rid of that. Just like that, boom. And with those two things, if you get rid of the states you don't want and anything below 250 or 200 in this situation, and you can always go back and cut more. We're now down to 130. So we only got rid of about 41, 42 notes there. Okay. Now, another thing that I look at too is if we go over here and we can now re-rank this, custom sort it by, let's go to legal. No, why is it doing that? Oh, hang on here. Cancel. Let's look at the legal balance. Estimated total debt is what it's labeled here. And with these low balance stuff, it's hard to make any money on those because there's often a huge amount of equity above. So you're not going to get, you know what I should do? Especially in some of these, here we get down. We get valuation amount over here. Let me just click. I'm going to hide the valuation date. We don't really need that. We know it's going to be old. So let's do valuation amount. We're going to bold that. All right. So I'll give you an example. Like this one, they say the estimated total debt is only 9,400. All right. And it says it's valued at 42. Well, the most you can bid is at 9,400. Okay. You be in the bank. You don't get the asset. You got to go through that foreclosure process. And I forgot to get rid of Kentucky stuff. I meant to get rid of that because that's one state I don't usually buy a lot in. So let me just go in here and select all from Kentucky. And we get rid of a few in Bonneville, Monticello, Owensville, Paducah. Yeah, I don't really recognize. I know it's in Owensville, but I'm not really interested in Kentucky. It's got a weird licensing law too, where if you're a private individual buying notes, they want you to have a $500,000 bond. And if you're an LLC, then we have $1 million bond through the state. So it's just another cash grab, I like to say. Okay, now we've got down here. All right, same thing. You see estimated total balance here is 14 grand. The valuation is 60. You're only be able to bid 14. Since there's all that equity, the seller is going to probably want you to be closer. You can see like the highest offer, they had 11 on this one. Well, it's hard to make any money if you're only owed 14. You know what I mean? Now, if the borrower is making payments, great. That's awesome. but they're not making payments. Not a good thing. All right. So I often like to get rid of some of this low balance, especially if you start getting low below 25,000. It's just not really worth my time in a lot of cases. I probably go 50 for the most part, but we'll go ahead and just for the heck of it, we'll just delete those. Now let's go over here too. And let's resort this by the valuation amount too. Get rid of some low valued assets. Custom sort. So here you see some of this low value stuff, 20 grand, 20 grand. That's probably needs some work. Like this one, 9831 Longview. Let's just take a quick look at it so you can get an idea. All right. Yeah, this one needs some work. We've had somebody actually drive out and take a look at this one as an example. Yeah. Now this picture is from June of last year, which just it looks like it's worth more than 20, right? But inside it's pretty in rough shapes. Although it looks pretty decent, I would say it's worth more than 20. You know, because it's on a decent neighborhood. But I've got, you can see the weeds are overgrown, so usually inside is not the greatest aspect of things. Question here. The inside will look as bad as the outside. In a lot of cases, it can. Other times, it may not. I mean, that's why you still put eyes on it. You know, usually that's what we look for. You know, we look at online views. If the current view looks good, great. But you know, huge weeds means that somebody hasn't lived in a while, and it probably needs a lot of work. Dean asked a question: why do I eliminate low loan to value? Because here's the thing: when I get rid of those really low loan values, I don't get when you're buying the note, not the property, Dean. Okay, because you're buying that note, and if you have a ton of equity above it, the seller's not going to sell that loan to you at a huge discount. They're going to probably want 80, 85, 90% of the legal balance. Well, if it means you're paying 80 cents on the dollar for a $20,000 balance, it means you're paying 16, and the highest you can bid at auction is the 20. And if there's a ton of equity above your 20, somebody's going to outbid you. You don't end up with a real estate. You only get that if somebody bids 24 at the auction, you're only owed 20. Guess what? You get to 20. That other $4,000 goes back to the borrower or it goes to a second lien holder. Doesn't go to you. You don't enter the property. So it's not worth bidding on these low value assets for the most part, because you're not going to get the property 9 times out of 10. Now, it might make sense if you're using an IRA in small amounts that way, and you're looking to, you know, maybe make some quick stuff on that stuff, but it's just not worth on that low LTV stuff because you don't own the equity. The equity still goes to the borrower. Okay. Does that make sense for you, Dean? It's not buying the property. You're buying notes. The note controls the property. But when there's a ton of equity, you don't get that equity. That's one of the biggest mistakes note investors make, especially new coming from the real estate side. Like, oh, I can buy that property for 20. No. You're buying the debt. And as the bank, you're controlling the property with that, but you don't own the property. You've got to go through the foreclosure process. Now, of course, if you reach out to the borrower and can get a deed in lieu, that's a different story. Okay. Of course, if nobody bids at the auction and you take the property back, that's a good thing. But we all know foreclosures are selling above. And if sellers know this, so this is why when I look at equity deals, I just don't waste my time a lot of times on that stuff. And especially those low balances. You know, I'd rather deal with an investor who's got 50 grand or more. If I'm dealing with small amounts, I'm using somebody else's money, they're probably going to be a big PETA. Pain in the ass is the last 5 or 10 grand they have, or only 5 or 10 grand they have. They're going to constantly bother you. So you're going to get a bigger bang for your buck. I like underwater assets, and this is why we talk over encumbered assets. If they owe more than the property's worth, then we really do control the property. But then we're not going to make an offer at 80% of balance. We're going to probably make an offer at 50, 60 cents on the dollar of value, because when they're over encumbered, they may owe 150, but that doesn't mean we're going to get 150. The house is only worth 100. So that's why we'll come in and make an offer at 50,000 or 60,000, and that's where we make our money. And that's where if you're a fix and flipper, it might be something to think about for you. But you got to realize you're not a flipper. You're a note investor, so you have to have a banker's mindset versus a property or real estate mindset. That's one of the biggest mistakes we see people making. You know, you got to get educated. You got to understand what's going on. It's why we teach classes. The whole reason we started teaching workshops years ago. It's also the reason we go through these tapes like this, so that you guys aren't making mistakes. Okay, aren't making mistakes. Okay, so yeah, that one. So we're just going to go really like Greenville, Texas. I may have looked at that yesterday too. That's like a lot. It's actually an empty lot. So we're just going to go anything below 50 grand. We're just going to get rid of. Okay. Boom. We're just going to go down here and delete it. We can always go back and take a look later on if you want to. Okay. But right now, it's below 50, especially with the appreciation we have the last couple of years. It's probably a pretty rough asset. Okay. So we got rid of a chunk of those assets. Now we are sitting at 77 assets. So we've gotten rid of just about 100. There's that condo in New Orleans. Okay. So now let's go back here and look at the estimated total. Yeah, we should be pretty good. Okay. So one thing I like to do is now that we have estimated total debt, we have the valuation amount, I start to insert some numbers in here. Okay. But one of the great things we have in here, since we have the delinquency date, let's refilter it. Because what's going to happen a lot of times, most of your tapes, when you get a big tape like this, it's really going to be 3 tapes made up inside of it. Notes that are basically performing is one tape, and you're going to price that differently. A second batch is going to be a non-performing underwater assets, which you're going to price that different way. And then the third is like we just talked about, assets with equity, which the sellers are going to want a higher percentage of that because there's this equity above what your payoff is. So let's do this. Let's go in here and first identify the notes that are basically on time. Okay, so we're going to go to last payment date or next payment due date and do newest to oldest. All right, so we resorted it. Oh, there's another market I forgot to get rid of. Chicago. Chicago is just, you're going to lose money unless you live in Chicago. So I'm going to get rid of a few more here. We've bought Calumet, Chicago, Dalton. Most of these, yeah, we're just going to get rid of. Most of these stuff are right around Illinois. Sorry, guys. Just it's a corrupt place to foreclose. We call it Crook County. You might also do Gary, Indiana, because it's a rougher spot, but that's for you guys to decide. All right. So now that we've got this sorted, let's go over here and take a look at these dates. So like some of these, like look at the next payment due date. Let me bold this up so you guys can see it. Let's go and highlight that in green. Some of these, remember this tape was pulled January 3rd. So some of these are relatively pretty current, right? And the way I look at things, when I'm looking at a portfolio of notes, one of my standard operating procedures, as we like to say, is look at what's going on. Now, we've had some things happen in the last 3 years. Can we all agree that with COVID kicking in 2020 and good people having to ask for forbearance agreements or stop paying because they've been laid off or the economy shut down? You know what I mean? So I hate to say this, I assume, but one of the things I look at is if somebody is defaulted in just in the last 3 years, they're probably the best likelihood for me to get them back on track. Now, it's beyond 3 years. They were in default before COVID, before the shutdown. People had the easiest time here in the last 3 years to get back on track, right? Doing a modification. Banks would basically accept any type of modification for the most part, just because they didn't want you to be late. So what I do is I will highlight the ones that go back to like 2020. So here's an example. So like 110, and we're going to highlight those in basically a blue color. So August 2022, 2021. There's one left in January. That's 4 years. So we'll just go ahead. And that's an LLC. Signal LLC is the bar on that one. So we'll take a look at that. So we're going to highlight those basically kind of in yellow. Okay. Because those could potentially be mods, reinstatements are already performing. Okay. Those are probably the ones I spend, most of my time with. Those are probably the ones we look at more so than anything else once we finish slicing and dicing. Okay. Now the next of these, so that gives us roughly 20 notes that we think we could get borrowed back on track. That's our best shot. Okay. The rest of these from 2018 down to 2002, oh my gosh, is there going to be the foreclosures for the month? That's not saying we can't get the borrowers back on track. That's not saying, hey, we reach out to them and suddenly the borrower wants to stay. Okay. Hey, borrower's willing to modify and go from it. But, the great thing about these, especially some of these lower ones have been around, you're going to get a huge discount on a bigger discount on these because they're waiting default. They will usually a whole lot more than what the value is. So with that in mind, let's go over here and narrow some of this down. Let's look at the equity deals. So we've highlighted those, okay? Especially some of these that are like these really since we look at these since 11, it's with it being February now, these are barely probably 90 days in default. They haven't made a payment. Some of these probably made a payment. Maybe they're back on track. Who knows? Okay. But these are the 20 that I would probably be willing to bet that I would make offers on to get back on track. I'd probably be the most aggressive in some of these, especially these 4 or 5. You're probably going to have to be at 80 cents on the dollar of UPB or value because you look at the interest rates 9.9, 4, 3.25. Some of these are gonna you're gonna have to go less on some of these because 3.25, it's hard to make any money on that. Okay, but we'll get that in a second. Okay, so what I want to do now is I want to see how much equity these things have. Okay, so I'm going to insert a column here, and we're going to say equity dollar amount. And what we're going to do is equal is the valuation amount minus the estimated total debt. Okay. If it's got a positive sign, we know we're going to probably have to offer 80 cents on the dollar, roughly that. So we're going to go down here and just copy it all the way down for the remaining 70. Okay. All right. Let's get that. Now we're going to go over here and enter another column. And do equity percentage. So basically, we're going to go over, take whatever the equity dollar amount is and then divide that by the valuation amount. The percentage. We can shrink some of this up. And we'll copy that all the way down. Control C. There we go. Now we have some of the numbers there we need to take a look at, right? Let me go over here and get rid of this yellow. And replace it with green. There we go. All right, so now we know if there's equity or no equity. That'll help us better when we get to bidding on a lot of the stuff, okay? Especially negative, we would go off of the value on that stuff, okay? Now, one thing I also like to do is insert a column and figure out, okay, if they are to reinstate, what are we going to get if we get them to just start paying on time for 12 months? So we got the P&I payment in here, right? So I'm going to do insert it in here. And I'm going to just say 12 months. Because that's if we get them back on time. Now we may get more, we'll ask for more, but the bare minimum, I like to base off if they start paying on time for 12 months. Okay. So we'll just do is equal to P&I payment times 12. All right. Control C. And then we'll copy that all the way down here. Now this one that didn't have a payment. This is let me guess, is this the New Orleans? Yeah, this is the New Orleans one. Okay, so this one says it didn't have a P&I payment, but they did say the total monthly payment is $737.41. We're just going to go ahead and copy that over to give us a rough number. There we go. Okay, good. All right, so now Let me shrink this down a little bit. Interest rates are good like that. Okay, so now let's go back here and we're going to look at where's our equity? There we go, our equity out there. Okay. So one of the things that I'll do is enter some different formulas in here now. Now, if there is equity, they're going to want you probably be, like I said, around 80% of the legal balance. Okay. So we'll re-rank this now, re-rank the spreadsheet. By equity dollar amount or equity percentage. And go largest to smallest. Okay. So now we see these like 74% equity, 72% equity, 68% equity. They've got a lot of stuff here. So what we'll do now is go down in here and just put, I'm just going to put a number in here and we'll end up changing that number, but just so you have a bit of an idea. Because remember, we got like 3 different things in here. You've got the performing stuff, you've got the non-performing with equity or the non-performing negative equity. So we'll just put on here and just say kind of the pricing model. And since there is equity, we'll probably have to say, okay, 80% legal. Okay. Now I'm going to copy that and just run it down. And I'll go back and change the formula in just a second. Okay. Now what I look for is when I start getting down to these single digits of equity, we know that value of a property can change relatively easily, right? It can change based on appraisal, based on the market. And you're going off of what they give us as the value just because it's on the spreadsheet. You find your value to be higher or less, you can always reduce or fade your bid. If you find the value to be less, then you're going to reduce your bid. If you find the value to be higher, you say, I'm going to be quiet and be glad that I got a higher deal on this thing, okay? So when I start getting to the 20% range, I'm looking at the dollar amounts of equity. So you see it's 15, 16. All right, so instead of 20%, I'm going to probably leave this at 30% equity and leave that at 80%. Oops. Sorry about that. Control C. Go down here and just copy that all the way down. Will be 80% illegal. Okay. Now anything below that, I'm going to look at stair step. Now, what does a stair step method mean? This is just a guide. All right. It's not hard and fast. Basically, if you look at assets, if you're bidding on assets that are below $30,000, you're not going to offer more than 25% of the market value. This is based on the idea that they are negative equity, right? They owe more than the property's worth. So you're basing it off of value of the property. Anything below 30,000, 25%. If it's in the 30s, 35% of value. If it's in the $40,000 range, 45% of value. If it's in the 50s, 55%. And that's really, anything above, 50, 100,000 more, you're gonna probably 55, 65% at the highest. If it's in a higher valued asset, we start getting a 200, 300, they may want you to go to 60, 65. Okay. These are all loan level bids. That means it's not a pool offering. It means you can make individual offers. So your individual offer needs to be kind of aggressive. If you want to get, I always like to, part of the reason I like to submit so many bids instead of just looking at 1 or 2 assets is if you only bid on 1 or 2 assets and you get outbid, then you're not looking at anything. I like to bid on 40, 50, 60 assets so that I have a better chance of getting 20, 30 accepted. And then through due diligence, I may end up with 10, 15, 5, whatever, but 5's better than 0. Okay. And just, a lot of times the seller will appreciate you submitting in, 30, 40 bids versus because they're going to deal with 1 person instead of dealing with 30 individual sellers or individual buyers. So it's a matter, do I have to chase one cat or do I have to herd 30 cats to the closing table? Okay. So we'll just go and put in here and put stair step. SS is what it stands for. Control C, and I'll just copy that down. All right. Now I'm going to go in and change it. I'm just put that in there so you have a bit of an idea. So the 80% of legal, we can go ahead and calculate that pretty fast. Okay. So we need to hit equal to, do we have a question? Somebody pop up with a question? We did. You're welcome, Laura. All right. So 80% of legal. Now, I may still reduce my bid before spend. It's like, oh, I'm not going to bid on this where it's only going to be like a 9% return to me. I want something that's a 12 or higher. So I'll go adjust my number, but I need to get a bit of an idea if I'm, just off the numbers here. This is kind of what the offer, and then I'll recalculate it based on the 12 months P&I divided by that, and then go from there. Okay. So, all right. So it equals to the legal balance times 0.8. And this is a dollar amount board. I'm going to copy that formula down now, Control C, and copy it down for the 80% of legal. Boom, there I have my pricing, okay? Now the stair step, I have to look at these values a little bit. It should be all 50%, $50,000 assets are great, because remember we got rid of anything below 50. So it's all 55, 75. All right, so what we'll do is we'll just say 55% of value, negative equity, or no equity to negative equity, right? So we're equals to the value. Oh, hang on, what's my value table? I got to go back and freeze my panes. View. Freeze panes. All right. All right, so now we'll just go, okay, that's is equal to your valuation amount times 0.55. We'll just put that in there. 55%. Okay. Play Control C, and we'll drive it all the way down. Now remember, probably a big chunk of these are way in default, right? We're going to foreclose on those, not going to waste our time on a lot of cases. And some of these we're going to reduce down even for 55 based on value and what's owed in taxes and stuff like that. Okay. So now we have a rough number on that stuff. Okay. So now we want to go back here. Let's resort it back to default dates. All right, so next payment due. This is the most recent stuff, right? Yep, January 1st. So now that we have pricing, now we know what 12 months of P&I payment would roughly be. Let's just go ahead and insert a column in here and just say, I like to say mod ROI. That could be reinstatement ROI. If they're making payments, what's their payment based off what you're offering? All right, so this would be equals to, we take your 12 months of P&I payments. Where do I have that at? Let me go back over here. Is equal to P&I payment, P&I times 12. Divide that by our pricing model, right? Okay, so you get 18%. We're just going to cover that, copy that all the way down. All right. Now you can kind of see this is roughly an ROI. If you buy at that, you're going to back on track, and they just paid the 12 months. What's the ROI roughly going to be? All right. So you see 18, 10, 8, 10, 7, 9, 13, 13. Some of these are relatively new here. These are all, you're probably not going to take that big a discount. They probably, 80%, okay, but not too desirable for my own money. Renee asked the question, which you're just got to be a little patient. Yes, I'm going to compare what my bids roughly are compared to what they are, what they may have already received. So yes, totally. You're paying attention. I love that, Renee. Good stuff. All right. So like we see, let's see how many of these we have on higher bids. These are all single family, so we're going to hide that. We don't need to hide it. Also, so see like this one here. Let me shrink some of this down. Okay. Like we have our pricing based on what we do. It's 40,005 or 535. They already have a bid of 43.5. Okay. Well, so if we wanted to beat that, then we would need to come in like say 44,000. 44,000 still gives us a 17% cash and cash return based on the payment history. Now, I've driven by that asset. I like that. No, I would be willing to make a 17% return on that occupied asset that's paying on time. So yeah, you better believe your ass. I'll make an offer on that. Right. I'll leave that in there. We go down here, like 42, you see here. Greenville, North Carolina. Their highest bid they have is 42,000. Based on our numbers, it's like 46, which we need to adjust that down. So if we just say 4,300, that's only a 9% cash and cash return. Not, not too desirable unless you're using your own funds for something like that. So I probably would not bid because I'll be using other people's money on that. They have a higher bid. I'm not going to waste my time. The next one down here. Now, this is why I say this. This is rare that we have these bids in here. And you can see, oh, okay, this is some opportunity. You can kind of compare. They don't always tell you this. Sometimes they'll show you reserve bid. And when they list reserve bid, that's kind of like, hey, here's what the least amount what we're looking for. Okay. And we'll, okay, great. But this keeps you from bidding on stuff that you're not going to bid, not going to be the highest, but you could always bid and say be a backup offering. And that's one of the biggest keys about success in the industry is following up with your bids. You may not be the highest bid, maybe a bit higher, but they may not know that do the due diligence. Okay. So while that one at 42,000 doesn't make sense, I may make a backup offering. Like if I need my number probably be at 35 on that one for 11%. So, and because it's a low interest rate, that's the reason it's such a low. It's worth 126. They only owe 57. That's why I'm gonna bid 35, but they're gonna probably want a higher amount. So I'll just submit it and be a backup offering. Let's just do 34. Let's see if we can get that magical 12%. No, not yet. 12%. Okay. And let's see, next one here, 48.2. We came in at 55. Somebody's probably using their own funds. That's totally fine. Let them win. I don't have a problem with that. We drop down to 48,300. I guess it's 11% return. Maybe worth taking a look, but let's just do 47,000. There we go. This next one, they've offered 82. Woo. They really wanted that asset. At 82,000. That's only 6% cash and cash return. And this borrower, how far behind are they? They're current, basically. So they're basically somebody's bidding to get a 6% cash and cash return. I think that doesn't make any sense, but that's somebody using their own funds and they're happy getting the 6%. So let them have it. Okay. Check your mod ROI formula. Well, it should be yeah, it's basically the 12 months P&I divided by your pricing amount. And that's why that changes there. My formula is right. Well, I don't know what to tell you because if you take, let's look at this here. Okay, AD4, number 84. AD is the column that had the 12 months of PITI. So that's AD is 12 months that divided by my offering. So my formula is right on that. So Laura, if you're looking at something, look at your formula and see where it's pulling from. So 12 months P&I payment divided by your rough offering should give you a rough mod. Okay. No problem. Let's keep looking here. This is always an interesting thing to look at what their offers are. Okay, so 32. Next one was Columbia, 6%. Yeah, I'm not, I'm not gonna make an offer at that, but yeah, I wouldn't do that. I gotta be better rate. So I wouldn't even make an offer on that one. Next one down here is 3,600 in China, Texas. They made an offer at 3,600 because it's probably let's just say 31,000 to get a 14. That might be a one we could win on. Now China, Texas hasn't made a payment since when? 11 November. That's prime for a reinstatement mod. That's gonna be a really good one. And we'll go back and take a look at that one. This other one, North Franklin Avenue, Heath, Ohio. 74.7. Let's do 75. Let's see what it says. Same thing, low 6%. It's not worth really making an offer on. Okay. So what am I doing? I'm literally, when I take the deed, I'm going to go and delete those off. I'm not going to make an offer. I'm just going to delete them off my spreadsheet. Let somebody pay through the nose. I don't want to come in there. Okay. I'm not going to be in the ballpark. So it's not worth wasting my time with low ball offers. Okay. But is this so far making sense, everybody? You kind of see the logic in what we're looking at? Remember, that's why we separate these into kind of 3 different tapes for the most part. Ones that could be reperforming, ones with no equity, and the ones with negative equity, or ones with equity, ones without equity, I guess that's the way to say it. Okay. So we'll go down here to the next one, 41,200 in Ridgeville, South Carolina. What are we coming up? If we come in, we get 42. Ooh, that gives a 19% return. That's a that's it's not so bad. 42 on a 58,000 legal. 2 divided by 58. 72 cents a dollar, 42 divided by 58. Yeah, that's not so bad. 58. 72 cents on the dollar for something that's only a few months in default. Yeah, that would be worthwhile, especially when there's equity above. Last payment date was July of last year, so you're talking 6 months. That's feasible. And you still have some room there to foreclose on if they don't. And we'll go look at the legal side too in a second. Okay. So 41.2. So we'll leave it at 42. Next one, 52.5. Look at that. My bid was exactly right on with somebody else. That might be my bid. That's pretty good. 52.5 they have. So let's do 52.6. Sorry. I was pretty dang close there. 13%. All right, we'll leave it there. This next one, no bid. We'll leave it at that. 24.4. I have it at 33.2. So let's go to 25. And then we'll go down here to this next one. They bid 22,384. We get 27. So let's just bid 23. And this next one down here, they don't have a bid. We'll go back and I'm not gonna make an offer at 9%. I'll go back and change that to from 90. They didn't get a bid on it, so I'll make an offer at that's New Orleans. We'll have to take a look at that a little bit closer, but let's just say 75,000. Actually, I probably need to be higher than that. Let's go 70. That's better. Okay. Now we get into the non-performing stuff. All right. So somebody's in at Canton, Ohio at 20,935. So we can come in at say 21,000. All right. Now we'll take a look at this. This may depend on legal, how far behind. Remember, we're now into the gonna have to foreclose aspect of things. Okay. So what's the next one down they have? Is one in Walkerton, Indiana. 40,002.75. So We'll just say 41. Fort Wayne, Indiana, 3573. I have right on pretty much the same thing, 3525. So we'll just say 3600. This one down here, 31,580. They're at 26,809. I'll just say 27. We'll look at the others. 53 for this Maitland, Florida one. We offered 93, so we'll do like 54. Not really. I mean, these that have these higher returns, like, oh, great, get on, reperforming. Yeah, it'd be great if we did get a reperforming. We'll have to take a look at that. I mean, will I offer everybody a loan mod? Yeah, I'll offer everybody to reinstate, start paying payments and stuff like that. So that's the thing. The non-performing stuff, you get a bigger discount. Hence, the cash flow is a higher ROI because you bought it at a bigger discount. You know what I mean? So you get the same months coming in with even you add some extra stuff to it. We'll show you how the difference works here in just a second. Okay, if you get them like pay 4 months extra, you're sitting pretty good. Memphis 24,102. What do I have this one at? 3250. So we'll just say 24.5. And of course, if it's trashed out, yeah, I'm not going to do. I don't want to do rehabs across the country. It's not occupied. We'll get rid of it. Or if it's owner occupied, we'll take a look. But if it's not owner occupied, boom. Of course, we see taxes owed. We'll reduce it by taxes owed as well on our offering too. Okay. So 30. And this next one was 28,558. We're 2,000 more. So we'll just say 29. This next one, 40,000. In Baltimore, we came in at 48. We'll just say 41,000. Next one, they offered 25.9. So we came in at 30. We're at 33, so we're pretty close. 30,000. Remember, the further delinquency these guys are, you're probably not gonna get these reperforming. All right, so nothing there. Next one offer down here is 40. We came at 47, so we'll just say 41,000. This one's at 34. Mission, Texas. This one's down on the border. And we might have looked at that one already. So we'll just say 35. All right, let's see, 29. See, we came at 29.8. We might just leave that. That's in Combs, Texas. 39,275. We came at 40, so we'll just say 40,000. 31 versus 38, so we'll say 32. Oh, I've looked at that one. I've already looked at this one. This one actually was a tax foreclosure, and it's gone. It's actually been sold off. We're not gonna waste our time on that. Memphis came in 11.6. This probably needs some work. $12,000. 45,000 on this one here. St. Louis and Westchester. 46 is what we're making an offer at. Now, the thing about this servicing company, the guy selling this, there is a small commission fee on top of where we fund. So you got to keep that in mind into your cost basis as well. All right. 1.5 points is pretty normal. So for them bulk stuff. This next one was at 20. This is Detroit, Michigan. We'll take a look at that, but 21 is what I'd say on that one, just to outbid them. 21,456, and we came in at 42. This one's a condo. We'll just say 22,000. See how much the HOA fees are owed. 68. We came at 98. So let's just do 69,000. Boca Raton, Florida. They came at 35. And we'll take a look at 36. $17,000. This is 86 for Carson Street in Detroit. They came at 17. They owe a ton, 186,000. Oof. Buys at 55, and so we'll offer 18. And last one, they offered 28. Whew. Camden, Arkansas, they offered 28 on this one. And we'll offer 29. Okay. Now, looking back at some of this other stuff, we probably want to be a little bit lower on stuff, but we'll do a deeper dive and kind of go from there. But is this making sense so far? Kind of how we got lucky. We can look at kind of what their highest bid, and we can kind of make a little bit higher on that one, which works well in most of our favors there, right? Good. All right. So now let's get rid of some of these that we don't even want to spend time on. So we're gonna get rid of that one. We're not going to make an offer at 6% for a reperforming loan. You could, you can always throw a low ball bid if you want, but if somebody's got that, I'm good. This one too, we're not going to time with that. All right, now going down here, let's make sure, especially these stuff that's going to look pretty performing. We really want to be at a 12% or higher return. Should we get the bid and to get reperforming? So this one is only 9%. So we're going to want to adjust this a little bit. So the 31, let's drop it down to 25 and see what it says. 11, so let's go 24,000. 12, okay. Down here, where it says 9, I got a little bit, so let's go to 30, 33. Well, so let's just do 31, 30. Let's try it again, 30,000. Try it. There you go. So these here, you know what? This is where we kind of make our offer. We could go ahead and submit our offer on these relatively quickly and be sitting looking okay, right? Now these down here, the ones that are beyond 3 years, they may have some equity, may not have any equity. This is where you got to be careful of and start looking at, where are they located? If you have to foreclose, are they in good condition? You don't want to be doing foreclosures or rehabs all across the country. You want to stick to kind of your neck of the woods. And so this is where we probably want to look at the legal description on what's going on these first, and then go from there. So let's do this. Let's go over here, take a look at some of the stuff here. So if it's vacant, not secured, that's important. So this one's vacant, not secured. You're not going to get a bar back on track. Okay. So let's separate these by vacant, not secured. All right. So 3 of these that could be potentially mods are vacant, not secured. And one's the estate of Michael Johnson. He's passed on, and that's in Fayetteville, Georgia. Vacant, non secured, and that one. So we're not going to get those 3. So we're just going to go ahead and remove those. Because if it's vacant, not secured, it's probably going to need a lot of work. May not need a lot of work, but let's not waste our time on those, okay? And if we get over here, now we really need to look at these individually. And what does the property look like? Do we have any notes on these? So like this one, foreclosure sale scheduled. That could be quick REO, first legal, none, file referred, foreclosure sale scheduled. Okay, this should have happened last month. Referred, foreclosure sale scheduled. Okay, great. No started, first legal action. So we have a bit of an idea that some of the stuff has just been started or is in the process, or maybe hasn't started. Okay. Well, that'll give us an idea. Like this one is just scheduled already. Let's take a look at that one. This is in Walkerton, Indiana. I don't know where Walkerton, Indiana is. Okay. I'll copy that. We'll take a look here. This is where you start looking at individual assets. Okay. Kind of rural. You know, when you see a map like this, first of all, let's see where the hell Walkerton, Indiana is and what's it near. Now, if it's on the outskirts of a major city, okay. If it's not, and it's out in the middle of the boonies, it's probably reason enough to go ahead and cancel it. Okay. Unless you've got carnal knowledge or individual friends or family that lives near there, that's a different story. Okay. Like South Texas, I come from a small town, about 10,000 people. The neighboring town has about 5,000 people. It's, down by Port Aransas, Texas. And I'd buy down there because I know that area. I got friends, family. I go down pretty often. I would be comfortable, buying stuff there. Not for everybody though. So this one is so it's south of Gary. It's closer to Gary. It's near Valparaiso. It's kind of out in the middle of the boonies, right? And let's see if we got a picture of the property we can take a look at. Well, 10155 East 700. Oh, is it that property? Or is it this property? Basically, and this photo is taken from August of 2013. So right there for me, it's pretty much too rural. I'm just going to say, you know what? We've got enough to deal with. We don't need a rural asset. Now, look, let's look at this one. Let's see if it is this one here real fast, okay? See, that's 10140. So it's probably the one across the street then. I'm trying to look at the mailbox. Or is this locked out there? It's just our luck. So it might be that one, or it might be that one. Yeah, just too rural. So I'm just going to go back to my spreadsheet, delete that one. I got enough stuff. I don't need that rural. All right, so we're going to eliminate that. Even though that could be a 20% ROI, when was their last payment made? 2017. So 6 years ago, within a week. Yeah. No, we're just going to go get rid of that. All right, so the next one, let's go down here and look at the Greensboro, North Carolina one. This one looks like it's out in the middle of Jumanji land. Yeah, that's June of 2022. Let's make sure 3704. Go for a street number. Yeah, it's probably back in there. Let's just look. Sometimes these Zillow maps are not accurate. Google Maps are not exactly accurate. And they've got that kind of. See 3701. Yeah, it's that lot. All right. So we're just going to get rid of it. So go back here, new share. I like Greenboro, North Carolina, but not worth doing that one. Yeah. Okay. Let's look at this Jellicoe, Tennessee. Don't know where that's at. Let's take a look. Okay, let's see where Jellicoe is at here. A little Deuce Scoop Diner. So this is where Jellicoe is kind of off the main road of 5th Street there. Okay, let's just take it out here and see. Is it near? What is it not near? It's near the Kentucky-Tennessee border. Williamsburg, so yeah, Millsboro, Kentucky. It's right on the border there, north of Knoxville. Okay. Let's look at this. It looks like this is from March of 2008. It's a few years old, obviously. 227 Providence Road. Yeah, it's really too rural. And this, remember, this is vacant and secured, right? If I remember correctly. Yeah, nope, we're getting rid of it. So you see, we're whittling down our list, whittling down to the better assets. Let's take a look now. If you don't mind doing rehabs, you can buy something in that neck of the woods. You're going to do it and be happy with a rehab. By all means, knock yourself out. But remember, you only get what the legal balance is. So if it's going to be hugely above, all this equity, it doesn't make sense to buy it because you can get outbid at auction. Question from somebody. Do you consider the discount earned at all when figuring out your terms? Yeah, you have to. What we're doing right now, Renee, is obviously we're getting rid of the ones that look like they're ugly. Vacant, non-secured. They're going to be in worse condition than most of the time if it's occupied. Of course, you can go look back. I'm going to rerun my numbers here. Okay, what am I making off, or what kind of percentage of value, or what kind of percentage of UPB am I making off of? I got to see a nice spread there. Now, like I said, if they're basically reperforming those first 5 or 6, I'll pay up to 80% if it's going to be a 12, 13% ROI or greater on that. But it's not going to be 12%. Then I need to get a bigger discount because then I need to get my numbers that cover. So does that make sense for you, Renee? If it's ugly, I'm not going to bid 70 cents on the dollar. I'll probably be 60, 65. Remember, we put these all at 55% roughly of value just to take a look at them. Okay. Good question. All right. All right. We'll look at this one and then we'll take a short little break. And what I'm looking for is where is it at? What year is the photo? What's the timestamp on the Google Map photo? Kind of get an idea. Is it in a decent neighborhood? Is it in a rough neighborhood? Now, this one's in Baltimore, and Baltimore has hit and miss neighborhoods. And we're looking for 5425. And this is from May 2019. So these photos are about 3 years old. So let's see where our property is at. So we're kind of, these row houses can be good, and sometimes they can be ugly too. Let's see what we see here. 5418. So we're looking for 5425. So it's across the street here. There's 5421. Maybe it's this one or this last one. There we go, 5425. It's, yep. It's vacant. It's Windows broken out. No. Go back to the spreadsheet, and we're basically getting rid of a lot of these. Okay. All right. Good stuff, everybody, so far. We're about the halfway of our 3-hour time frame. So what I'm going to do here, guys, let's take a quick little break. Get up, bio break, fresh cup of coffee or water, maybe grab you a little snack. We're just going to be basically about 5 minutes. I want to dive back in, but just give us a chance to stretch. If you're watching this on YouTube, I will refresh the stream, so it'll be a part 2 to it as well. And we might actually, we'll do with the YouTube. We'll just let it run. I don't need to stop it because we did hit record in the first session here. So we'll leave it be, and we'll just take a quick 5-minute break and be right back. Okay. Question from somebody. Laura, you need to get your bids to me before 5 o'clock today. Now these on this tape, you could bid next week. You can actually go direct to the seller on this, like I outlined in Basecamp. The ones we went through yesterday, those need to be in by today. Okay. And I'll text me and I'll text you right back which ones I'm talking about. Okay. I don't want to share it on here. All right. See you back in 5 minutes. All right, guys, we'll get back here in just a second. Thanks for a little bit break. Took a few more minutes, but hey, I'm sure you guys don't mind. Got a little nibble on something there for my lunch, and we'll get ready to get the energy back up and rock and roll on the rest of the stuff. This has been valuable for you guys that are watching, tuning in on this. Hopefully it is. I think it is. If it has been, what's been the number one thing that you see? Is it just seeing from my eyes? Is it just seeing some of the different things that are new for some of you guys that are new to the note business? And I'd love for you guys that are watching or live streaming also on YouTube to share. I am monitoring those questions there. So, Laura, what's been the most valuable thing for you? Just a second set of eyes? Laura knows that I talk to Laura all the time, and it's a good thing. Laura always calls me up and she's like, "Can you give me a little coaching on these bids? You know, what am I missing?" I tell her if she's missing. Yeah, it's reassurance and that I know what I'm doing. You got to have some confidence, gal. But you know what? It's always good to get a reminder. It's always good to get it. And look, the more you break down, the more assets you break down, the better you are going to be. All right. Hit the record button. All right, everybody. So let's get back with the second half of this. And like I said, fielded a few questions there. I've gone through thousands and thousands of non-performing notes or performing notes and tapes and tapes and tapes, and been doing it for a long time. Golly, going back 15 years now 16 years now as a note investor. You've seen a lot of changes in pricing, how we bid off of stuff. It used to be we used to bid off of UPB. Now we bid off of legal because values have increased. We had a lot of homes that were underwater previously in the day, so you had to go off of value. Now you have a lot of value above that, and you go off a legal balance because that you still. So it's always changing, and this is why we always say, if I give you some guidelines and stuff like that, it's a guideline. It's not hard and fast. I mean, it used to be I wouldn't pay above 40 cents on the dollar for stuff in Florida. That included taxes owed. Now I'll pay up to 70 cents in some cases. So just keep that in mind and understand. Here's one of the most important things. If you're here tuning in and you're listening to the Note Closer Show podcast, first of all, thank you. Leave a 5-star review and leave a comment. Love to hear from you. If you're listening to Note Night in America Monday nights or the replays of that or Note Camp over, first of all, thank you so much. But the most important thing is there's a lot of information out there. It's not all created equal. There's a lot of people that aren't doing things on a regular basis. They're not buying stuff, or they only buy one niche or one strategy. You know, your strategy is your strategy. And I'll tell you, my strategy's changed over the years too. When I first started off, I came from the fix and flip side. I was buying a lot of stuff that I was foreclosing on. I should have modified a lot of stuff. You know, I know there's, Bill Mancaro from Paper Source. He has the Paper Source convention every year in Vegas. He's only foreclosed on a couple of his deals in his 30 years. He's always trying to do a deed in lieu, cash for keys aspect of it, or he's selling the note off and making a profit on the spread. Some people are, biggest mistake I made my first year was foreclosing on everything. I should have modified more, had more cash flow. I wouldn't have to been paying out attorney fees and servicing costs and then rehab costs. I could have been keeping people in their houses, reperforming, and then 12 months selling that note off at a premium or still retaining for cash flow. Okay. You're in the note business, not in the property business. That's one of the hardest things that you have to do. You got, like I said, you got to put that banker's hat on versus that hard hat from fix and flipping. Okay. So, when you start making offers, you're gonna screw up some stuff. It's fine. The idea is you learn more from your bids. If your bids aren't accepted, find out, hey, where do they come in at, and work the numbers back. Take the time to work through them individually, and then, don't be afraid to make offers. Don't be afraid to make offers and see what sticks. Don't be one of these that you make a ton of low ball offers. Low ball offers can get you blacklisted. A seller will realize that you're not serious. And if you've got a reason for it, like there's, you normally you bid 20, but you're bidding 5 because there's 15 grand back taxes, that's a legitimate reason. Or they say the property's in good shape, and when you send somebody out to take a look at it, oh my gosh, it's trashed out. You buy the lot. So we're not going to know everything about an asset before a bid. If you wait to know everything before you make an offer, you're going to get outbid 99.9999% of the times, and you'll be frustrated. The idea is you do some quick online due diligence, submit your offers, see what comes back accepted, then do a deeper dive. That's when you pay for your broker price opinions, send a realtor out or somebody out to do an external drive-by, you pull in title work, doing a deep dive and going from there. Okay. And Laura Miller says amen to that. Okay, good stuff. All right, so let's pull back this up and start looking at some more of these vacant assets out there. Okay. The next one, we just looked at the the one in Baltimore, Maryland, that row house that had I don't know where Sagerton, Pennsylvania is, so that alone would almost basically cause me to kick it to the curb. Remember, the further down we're going on this list, the more defaulted they are. So it's probably going to get worse to worse to worse. Okay. Sagertown, PA, don't know where the heck that is. It looks like an older photo. The dark ages of Google Maps. This is from, see, this is 14-year-old photo. Yeah, no, what I did, let's do this, because when I start seeing more and more of this stuff like this, guys, we're going to get anything we don't recognize as a city, we're just going to delete it now. Okay. So, all right, come on. All right, can you see my spreadsheet? Okay, so we're just going to get rid of that. I don't want to own that one. I'm not going to pay 41. All right, so Cleveland, Ohio, we'll take a look at in a second. Barberton, Ohio, don't know where the hell that is. So we're just going to get rid of that. Merritt Island, we know, we'll take a look at that. Ossian, Indiana, don't know where that is, but Kansas City, Baltimore, South Bend, we'll look at Melbourne, Florida, Baltimore. Okay, so I don't know where Ossian, Indiana is. We'll take a look at it just for the heck of it. See what it's near, because it is the Hoosier state. It's out in the middle of nowhere. Enough reason I don't need to look at it anymore. Now, part of this, when you're looking at these assets, and you're happy with it and it looks pretty good, guess what? Start saving photos of the property. So let's look at Merritt Island here. I think this might be a mobile home. I could be wrong. $64.54 Merritt Island. Okay, so Blossom Road. Oh, there's 9 photos. This one. This is nice if you got multiple photos. Oh, well, this is January 18th. So that should tell you a lot land. Nope, we don't want to own a lot. We don't want to own land unless you do. There was a property there. It's all for sale sign. Big tree. Yeah, well, that's probably the behind thing, but no, we don't want to own that. So we're going to go back and delete it. And that's why you look at it. Okay, let's go down to Melbourne, Florida. While we're in God's waiting room. Okay, this is from September of last year. Yeah, that roof is kind of caving in. Somebody's using it to park their toys next door, aren't they? Yeah, not worth keeping. Nope. We'll look at South Bend and then we'll just probably delete the rest of these. South Bend, Indiana. One of the things that's when you're looking at properties or notes, one of the things I look at when it's in cities that have big universities like South Bend is known for Notre Dame, is to see how far that property is from like the major stadium or the university. If it's within like 5 minutes, it may be ideal to hold on to for rental property if you want to do it, or Airbnbs or VRBOs for like home games, stuff like that. And oh yeah, this is this ugly house. I think they might have looked at this a little bit yesterday. I might have a little cross. Okay, yeah. Nope, not worth. Go back here. Just gonna get rid of those. Forget it. Delete row, delete row. Okay, now let's go over here and look at. Oh, went way too far. And it was the occupancy type we had that filtered for, didn't we? There we go. Now we've got, all right. All right, so now we're looking at some stuff here. So this is further down here, original owner occupied, okay. These are the loans have matured already. All right. So this one, let's look at this 1044 Westwood Road. I got a student that likes Arkansas stuff. I think this is a home on Street. Yeah, I've seen this one, Westwood, Camden. 2,400 square foot house. Yeah, so okay, so this is a great. Yeah, I've seen this one. It's not a bad looking little house. So if we do click on images, it might have better images of this 1044 Westwood Drive. Yeah, that's it. So it's got some pride of ownership. If you look at some of these photos here. Oh, it's 1022. That's not the right address. Because we're looking for 1044. It's kind of the same style of house. My students may not drive past it, so it's a possibility. So we'll leave that one in there. And well, now we know that their highest was 28. I'll ask my student if he wants to bid 29 on it. Okay. All right, these are the non-performing stuff. Let's look at some of this older stuff that's in the 3 years here. So like I don't know where Bonaqua, Tennessee's at. We're just doing a quick look. Bonaqua. It's an empty lot in Bonaqua. Yeah, it's photos from, yeah. Let's go back here. So if we go back to our spreadsheet. So this one, we kind of had on the value on this. They had 29,000 on this thing. I don't think it's going to be, it's a land contract. They made a payment since July of 2021. They filed BK Chapter 13 on this one. They filed this in October. So they filed bankruptcy right around the time. I mean, yeah, that's into COVID right there, October of 2020. So let's see what their legal is on this. It's original owner occupied. Don't know so there's no foreclosure started on this. So it says BK 1900. What are they paying per month on this? TNI said basically 401 a month. I'm not afraid of a land contract or a contract for deed. It says valued at 70. Owes 43. Yeah, I got some equity on that. that's too really too. I'm gonna go down on that. I'd offer 30 on that one because you got to have a little bit of room there. Remember, if you've got now with a land contract in Tennessee, it's more of an eviction. So if it's worth 45, what is it? Worth 70, and I'm in at 30. Yeah, that would make sense to do. Let's look at the taxes on this thing. Okay, so we'll go over to Metro Online. Can you see? Yeah, you guys can see that. Okay. Bonacqua, Tennessee. What county is Bonacqua, Tennessee in? Hickman. Okay. County. Let's do Hickman County. And we'll do the tax collector. Mention taxes are owed. Sometimes these counties will have better photos as well too, like most current up-to-date stuff. All right, so we got to find Tennessee on here. Why is this? I don't. Let's just go back here to the appraisal assessors. Okay, that's better. Property search. And we're going to do property address. All right, so basically when you have a long, let's just look, probably to. Well, that's strange. Property address, it's right. Okay, let's try the borrower's name then. And it's good when you have the borrower's name. If you don't have the borrower's name, then it can be difficult sometimes. All right, so last name on this one is McKinley. Let's see here. Well, I'll be a monkey's uncle. All right, well, you know what? That's a bit, we're just going to get rid of that one. I'm not like, you answered what somebody asked earlier. Would you be worried about paying a huge amount at LTV? I'm like, no, not really. But the way that's rural, you're probably going to end up foreclosing on that one. So I don't mind getting rid of that one. I mean, yeah, it could be good, but if we're having a hard time finding it, it's just get rid of it, delete. Okay. All right, let's go to the next one. Athens, Alabama. Look at that. It's a rough photo. Oh my gosh. So it's a mobile home. That's old photo. Oh, maybe it's that one. Who knows? I can't tell. Nah, too rural. Let's go ahead and get rid of that. Unless you live in an area there. Now let's if we look at some numbers here. Okay. They owe 34. It says it's worth 135. Marie Pack, conventional. All right. So July 1st is when she's made, is her next payments due. Let's look at the legal side of this. File the BK chapter 13 February for just basically a couple months of payments. No legal on this, so maybe she's paying monthly. Maybe she's paid that. Modified 2019, so couldn't stick with that. Let's see if we can't find it in the county records. Because that could be a really good little ROI if you just reach out to the bar and say, hey, we'll get you back on track. Okay. So let's see here. Let me share back to here. What county is Athens, Alabama in? Limestone County. You should always check the taxes owed on the assets that you're before you submit, just for the heck of it. Okay. That's an important thing. It's free basically to check. It's like we're doing right now, Limestone County. Like a limestone cowboy. All right, so Limestone Revenue Commission, it's probably going to be where we need to go. I'll give my day job as a note investor to quit to start singing, right? All right, so property tax, let's look here. All right, property, name, part of the address. So this is 13717 Reed, I believe, right? 13712 Reed. Here we go. It's 13 Pack. Martha Pack. All right. So one thing we want to look, is that the same borrower's name? Because that could be a big red flag if the borrower's name is different. So let's see if Martha still lived in this house. It is. It's Marie Pack. Okay. So that's fine. Okay. And let's see, we got any better photos here. So we'll click on this one. Yeah. Martha Marie Pack. Yeah. Okay. So it looks like the servicing company's made some payments before, either escrowed it in or made on behalf of Martha. Now, I don't know if this is you see here, one thing I look at, you see the disability code? X, I don't know if that means that she's filed the disability. And where's the taxes? Pay taxes. Boom, boom, boom. $30. Yep. That's not a lot, right? Maybe it's all she's due so far for the year. It's $30, which is not that big a deal. We are live. Yes, we are live, D. So it's not so bad. Okay. Yep, they're $30. So maybe she is filed. You know what? I'm happy keeping somebody in their house like that. Now we just don't have a photo. Let's look at the assessment. See if we got anything there to pull it up. Nope, that's where we're at. Okay, that's what we've seen. Okay. Yep, she's lived there since '94. She's lived there quite a while, so she's definitely got some interest in staying there. Yeah, lived there for quite a while. You know, she may just have a hardship on that stuff. And if we look here, depending on what it is, I like helping people. Because that's the thing. If we can get her back on track, say, okay, you haven't paid, you filed bankruptcy trying to stay there. I get it. Now if we look at the story here. Hey, Sherry. It's worth, let's just say conservative 75, right? Or 95. And we can pick this thing up for 30, for 23. I don't necessarily want to foreclose, but you got somebody on here. She's behind since July of 2 years ago. That's 2.5 years behind. If we just take that amount and put the amount to the back of the loan, great. Does she file bankruptcy? When did she file? Hang on a second. So she filed BK. So she filed BK in February of 2021 for $928 to avoid. Yeah, she wants to stay. That's a yes. I like that one. Yeah, we're going to submit on that one. Yeah, this is what's great about this business is you can get it for 23 and get her back on track. That that's a win-win. It's worth a whole lot more. Based on how old she might be, it might make more sense for her to do a reverse mortgage and not have to make a mortgage payment. So that's a definite yes. That is a definite hell yeah. Okay. So we're going to highlight that in green because that's yes. Do you understand kind of where we're going with that, everybody? Yeah, there's only 6 years left in the loan, but it's actually longer. She made a payment in a couple of years. So there's still, she owes 34 on it. You're paying 23. You're paying 67 cents on the dollar. Yeah, that's fine. You're really into it more than that. You add the 3 years to it. There's, a few more years. There's 9, 10 years. That's a win. Maybe you can get a cash out refi. You can get her to do something like, but that's Athens, Alabama. I'd rather keep somebody in. Thank you, D. I appreciate that. Thank you for the kind comments on YouTube. All right, let's go to the next one here. Thanks for helping out with the due diligence on that one too, Sherry. All right, let's do Andrews Drive. And Sherry, I sent you an email yesterday. Didn't know if you saw it or not, or hadn't had a chance to respond back to just following up with you. All right, so let's go back here. This is Andrews Drive in Americus, Georgia. America. America. I want to live in America, America. Okay, so look at this. This is a picture. Well, this is a few years old, 2013. And we're looking for 121, right? That's it, 121 right there. Now that property, same thing. It's a little older photo, but it's a little brick house. Hey, let's go to the spreadsheet. Let's go to the numbers. Let's go to the tape. All right, same thing on this one. 077, it's only worth 50. He's upside down. He or she's upside down. Rita Williams. Derek says, I'll buy that one. It's just south of me. There you go, baby. Let's look at this conversion. March of last year. So they're just coming up on a year behind. They pay $443 a month. That's not so bad. Last payment was April of 2022. Let's see if there's any legal on this stuff done. Now, Georgia, you can foreclose quickly. It's been referred to attorney. They referred it in 2021. So they referred it, and then they must have paid a payment, but they haven't done anything since. Okay. Well, that's not so bad. 27.5. Is there a bid on that one? There isn't a bid on that one. That's kind of surprising. Maybe get that back reperforming. It's a 19% cash and cash return pre-servicing cost. So let's find a little bit something about Rita. Let's figure out what county is Americus, Georgia in. Actually, if we go back here, a lot of times we just look at Zillow. Zillow will give us a link directly to the county website. Oh, come on. Oh, maybe it doesn't have any information. That'd be our luck. Three-bedroom, one bath, 1375. It's on a and tell us how big. Sumter County. Thank you. We'll go over here. This is in Georgia. Sumter County. And our borrower's name was Williams, wasn't it? I think Rita Williams. Rita Williams. There it is, 121. She lives there because that's the same as the mailing address. So we'll select that one. She only owes $128. That's not so bad. Lived there for a while. Great. I like that. So she's got some pride of ownership. Cool. That's a definite yes. Yeah. That could be, again, a pretty good yield on that one. And nobody's been on it. So we'll go ahead and highlight that one. Moving on up. Moving on up. All right. Let's just look at this one real fast. Let's work at the top and work our way down. This one I've actually driven by before a couple weeks ago. And this is one where the bar is basically on time. So it's just basically, it makes sense. Yeah. Yeah, right there, 6809. That 60. $68.10, so it's the one across the street here. Yeah, that's what I thought. Yep. I drove by and they had a big Air Force sign out in the front yard, big Air Force flag. It's in good shape. I was happy with it when I drove by a couple weeks ago, so that's a definite yes. Taxes are paid up to date on that one, if I remember correctly. So yeah, that's pretty much because if you could get this thing, it's basically a 17%, and they only got 43.5. Boom, that's a slam dunk little performing note you can pick up. Okay, now they may have been behind at some point, but it's okay. Fine. Let's look at the one in China, Texas. I have no idea where China, Texas is at. Might be a little too rural. Doesn't even pull up. Well, if you're looking to get this tape, you would want to be a part of our WCN crew, or WCN monthly WCN crew, and you get signed up for that. It's $97 a month. That gives you training, access to our online stuff by going to noteumbrella.com. Noteumbrella.com is the website to get signed up to have access to these tapes and stuff like that. So, all right. Now this picture is it's 11 years old. Dang, it's pretty old. So I wonder if it's this down here, 302. See any numbers on the house? No. That's the kid in soccer, looks like. So let's go back here. Let's look at this here. Yeah, I just can't send out the tape to anybody because it's we don't end up people to have create daisy chains and joker brokers and all that good stuff. Not that you are or anybody is on here, but it's happened before, and so that's why we do that there for you. But you get access to stuff. We post stuff on a pretty regular basis in there. Okay, so this is outside of Beaumont. Oh, okay. I have a 90. Well, how far is it from Beaumont? 2 miles to really about 4 miles outside of Beaumont. Okay, that's not so bad. Yeah. Let's see how much she owes in back taxes. What county is China, Texas in? Jefferson County, Texas. Okay. Boom, boom, boom. Come on, Jefferson. Okay. All right. So let's look at the tax office. And 302 Broadway. Yeah, to Broadway Street, Ferguson Fence Company or Ferguson, Elizabeth Ferguson. Let's go here. Elizabeth Ferguson, okay. And have they done any legal on this? Last payment on this was November, so just really about actually 90 days ago. Probably haven't done any legal on it because they're back on track. Now they did file a, oh, look at this. Look at looky. This is a chapter 7 filed January of last year. There was they didn't pay. There was a foreclosure sale date set. There was a date set. They filed bankruptcy in January. Well, that will be interesting to take a look at. Now, they've made a payment and want to stay in it because they filed bankruptcy on that stuff. So they owe, let's see here, they valuation is 110. They only owed, estimate is 95 they owe. What? That's crazy. They hadn't paid in a while then. Yeah, so that could be a decent little, yeah. Didn't say how much they were, chapter 7, so they should be liquidation. Oh, we'll have to take a look at that one. But yeah, we'll go ahead and make our offer on that one anyway. Okay, let's go. All right, let's go to, let's do St. Stephen, South Carolina, because we've got 1 South Carolina, 2 South Carolinas, and we can do that. So we'll do St. Stephen's. There's another one basically performing. We never did look to see what taxes are. Sorry. So 302. Only $114.83 is owed. That's fine. But she doesn't live there. She lives in Beaumont, and this is an investment property for her. So that's fine. She runs a business out of it, but that's okay. Probably doesn't want to lose it. All right, so let's do maps. Is this a condo? $104, 1047-2 Universal Circle. So it's probably the condo. Let's take a look here. Looks like it's kind of out of rural. Owner occupied. No foreclosure. Kathy Jones Priolu. Okay. Yeah, it's kind of out in the middle of nowhere. What's it near? Kind of halfway between St. Stephen's and Jamestown. So north of Charleston by about 30 miles, about 20 miles from the coast. Might be a little rural. Let's see what county. Berkeley County. Okay. I'm definitely want to check taxes on these because the fact is, I mean, like $100 is not that big a deal. I'm not worried about $100. We can make that up. If you got to get more, your taxes are over $1,000, then you probably want to reduce and fade your bid by that then. Okay. Can't even say it was in. Sorry. Berkeley. All right, let's see. Let's just go to, we'll do the assessors first. And let's do it by owner name, might be easier. Kathy something, Kathy Jones something, right? Prelu. Priolu, like a French name, is that? Universal, was it 1047 number 2 Universal? There we go, right there. Fred Priolu. Okay, so it's 2 different lots on this though. Sherry says that based on NARPR, Wachovia Bank bought it in 2006, I think is what you said there. That's fine. Yeah, there may be. Yeah, see, yeah, so Wachovia Bank says they own it here. Previous owner, so Wachovia, look at this, 2004, Bernard Prilu, sale price of 49. So they must have bought it back from the bank. Because we look back here at the, let's go look and see what the details of this loan are. So is this a traditional first mortgage or a contract for deed? It's a conventional, and the originated in 2007. So they bought it back from the bank. There you go. Okay. They definitely want it. So that's a yes. Because they get it back on track. I mean, that's only a 10% return. Yeah, no, we need to get better return than that. So let's do price because we didn't adjust it back that. So if they owe 77 and let's try 55,000. Now, if we buy it at 55, what's it going to give us? Enter, come on. A 12%. So let's knock it down to get at least 14, 15%, because nobody's bid on it already. So let's try 45,000. This is a 14. That's pretty good. 45. That's still a little over UPB, but it's below the estimated legal balance because they're behind at some point. Let's just do 40 and try at that. Let them counter us. Okay. All right, that's South Carolina. The next one, South Carolina, was Ridgeville. Dorchester County. I got too much stuff open. I need to start closing some stuff out. And this one is 1149 Old Gilliard. Old Gilliard Road. Okay, let's try the borrower's name on this one. And the borrower's name on this one is Lee, Bucknell Lee. Lee. All right, let's add a BUC. Well, let's see. Lee Berry. Am I seeing this is Old Bucknell Road? Nope, I don't. Well, let's try that with assessors. Yeah, that's what we just did, wasn't it? One more time, just trying. Maybe there's a second page I'm missing. All right, well, let's do one more little thing. Let's see if we can find, I don't think I jumped on there and looked for just the address. So let's take a look here. Old Gilliard Road. 1,212 square foot single family. This is from January of last year. Wow, that's a nice looking little property. But that's it. 1149. Okay, it's one of these. It's probably this one. Yeah, I hope it's not this one. Ah, shoot. You want it to be this one. You don't want it to be this one. Oh, let's see. Let's make sure. Let's see if there's a street number on here. Anything. Probably not, since it's the mailbox. But there's a lot of pride of ownership in that one. When's the last payment on this one was made? July 1st. Let's go into June payment. Haven't filed bankruptcy. Owner occupied. It was referred to an attorney. Okay. Yeah, maybe we can get back on track with one phone call. 41. I'll make an offer at 42 to 19. Yeah, that's a yes. If it turns out during the due diligence is the trashed out property across the street, then we can cancel our bid, no penalty. Okay. All right, let's go up to Greenville, North Carolina. Actually, one of the these are all kind of looking like yeses, yeses, yeses. We kind of go through this. Okay. I think Anadarko was kind of rural, if I remember looking at that. I'm going to not waste my time on that one because it's kind of out in the middle of the boonies. But let alone, let's say we end up buying these, your offer on these. If your offer is accepted, you're making boom, 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 boom. That total amount on those 13 performing notes is 448,000. Okay, so let me share something with it. 448,000. And it's bringing in, we can get them back on track. The big if, which I think we can. Sometimes we just need a phone call. If they start making their payments, total, it comes to 67,000. Now you're buying this stuff. Let's look at the values on this stuff just off of this. All right, so they got that. Let's look at our values. They're valued at roughly total of 1.45. Let's just say 1.4 million. So basically, you're buying this stuff at 32 cents of value. Okay. If we look at the spreadsheet as far as what's owed, estimated legal, that's at 816,000 is what's the legal balance. So you're basically at 32% fair market value. You're buying it roughly over, well, not that's that number divided by that number. You're buying it at 55 cents on the dollar of legal balance. Okay. Not bad, but you're basically your annualized return on this stuff, though, if you're getting 67,000 on a monthly basis, getting back on track, divided by your $448,000 investment, that's a 14.95% cash on cash return. You guys see this? Let me blow this up a little bit for you. Now that's pre-servicing. I get it. You know, if you got get back on track, you're gonna not immediately, but that's on the ones that are performing, great. You're just kind of sitting in there on average. You're already wrong. The ones that aren't performing, you're gonna ask the borrowers to bring some skin in the game. Hey, can you make a little bit extra? Can you pay $100 extra a month and let's get you back on track? If not, guess what? You foreclose. You're sitting at, if we look at, let me go back here. You're technically buying this stuff. Let me copy that, Control C. It's legal. We go back here, our offers. Well, we already did this. But you're basically is equal to that divided by that. So some of these you're paying at 86 cents on the dollar. Second one. Control C. Put the numbers in place. There we go. That should be better. Give it a second to kick in. There we go. So you're bidding somewhere between, I mean, 80 cents on the dollar, 32 cents on the dollar legal, 35, 68, but there's, you know, the values are probably a little bit lower than those. If we go over to the value side, there you go. You can see now. You see why how we're getting it. So you're buying it at a big deduction off of value, a lot of equity, a lot of emotional equity. That's why those folks want to stay. Now, you know, this is why it does make sense maybe in this one, 86 cents on the dollar, because they're already paying. They're really not. You're not buying a non-performing note. You're getting a great yield at that number. Okay, 80 cents. You're still getting a great yield on these things. You know, so we look back here at the number here. Yeah, you're making anywhere individually. Yeah, basically, like I said, 14.9%, anywhere from a 12, you know, to 22% cash and cash return. Your weighted average 15. I mean, think about that. I mean, you could put folks in at 6%. If your money costs, let's go back here and figure this real fast. So if your money costs, you borrow money. Let's just say you buy, you need a little due diligence money on this stuff. Let's just say you borrow, let's just say 460,000. Okay. And you get money at, we'll just say 6% and 7% and 8%. Okay. So that is equal to what you pay. 0.06 is equal to that times 0.07. And this is equal to that times 0.08, 36.8. So there you go. So basically, if you can get your money costs at 6% from an investor who's got nothing, making nothing on their money right now through IRA investors, you know, your networking. I mean, people would, I mean, especially people aren't doing anything. 6% is great. That still gives you your profit, annual profit is $39,000 a year. $34,000 a year. $30,000 a year. On those, with 13 notes, I said it was, right? 2 to 14. 12 notes. 13 notes, yeah. 13 notes. So this is the important thing, guys. You're in a safe position there. Yeah, you might be a little high on that one, but they're the one that's been paying the most. But you're still sitting at freaking great returns of the legal balance being there. This is what your purchase price offer, percentage of legal. This is your value, percentage of value. I mean, guys, you're all less than 90 days from raising $1 million. Honestly, if you learn how to market, some of these pictures we've looked at, they've been great. You can take those photos straight off of the county websites there or off of Google Maps. Say, hey, I got a deal. You got 0%. You got money. You put work. Yeah, you raise $460,000. That gives you about $12,000 and some change. It's about $1,000. If you have to foreclose, you got to foreclose. But these alone are the ones that are most valuable that I think you get back on track. Hey, you want to stay? You want to go? If you want to go, then we'll foreclose. You got plenty of value. Especially these later ones, you're still sitting at percentage of legal balance. You got plenty of room in there to foreclose on. Like this one, 2334, that's 11,000. They got 50, 54, 16, 21, 9, 5. This would be the skinniest one. Yeah. So that's the thing is that, hey guys, this is how you make money. You're arbitraging, paying investors 6 to 8%. You're going to make anywhere from $39,000 to $30,000 a year. Now, if you figure that out, that's putting extra anywhere from $2,500 to $3,200 a month into your pocket. That's not counting any extra of them getting caught back up. That's just based off they start paying, you reinstate, and they start paying on time again. Who doesn't want that? That's an average. If you figure that's an average of 200 to, 12 times 12. 200 to 200 to, so basically 260 per month above your money costs. That's paying your investors their money costs. Who wants to put some money to work? Who wants to put some money to work is what I like to say. And if you'd like to find out more information on kind of the different options we've got available, feel free to reach out to me, Scott at Scott@WeCloseNotes.com is my email, or you can book a phone call at talkwithscottcarson.com. But I mean, guys, we got to submit our offers. If they get accepted, great. If they counter a little bit, do we have some room in there? Yeah, we still got some room. But you make 12 offers or 50 offers. Now, the others, we go back over here. These are the ones that we're probably going to foreclose on. And then you got to look at what kind of location they're in. If they're, like I would look at some of these and say, I don't want some of these. I don't want like if I don't recognize where Fort Wayne, Indiana, I understand Fort Wayne. Columbus, Ohio, that's pretty easy. Maitland, Florida, yeah, look at that. Memphis, okay. Columbus. Some of these cities that I don't recognize, I'm gonna get rid of them. Some that I do, okay, I'll take a look at them. But once again, you're gonna want to make sure that you're at a good percentage. Comprende, everybody? Has this been helpful? Hopefully this has been helpful, kind of seeing how the idea behind it. CC Senor Laura says, awesome. How about everybody that's watching on our live stream? Everything good over there too on YouTube? This is what it comes down to, guys. If you want to learn about this stuff, hey, guess what? Get signed up for a workshop. Best thing you can do, make it affordable. Sign up for our Note Umbrella, our WCN membership by going to noteumbrella.com, getting signed up today. It's there for you. You get access to tapes. We do weekly coaching calls on Mondays at noon Central Time. Those are recorded in case you can't make it. We put tapes in there. We're available. It's the best bang for the buck in the note industry. We'll teach you how to market. We'll teach you how to raise capital. And, it's probably, D asked a question. Don says, good stuff. Thanks. You're welcome, Don. Is it possible to get that type of return on a single property on the on the non-performing side? Yeah, you can get that if you get back on track for sure. It's just with these, you're going to have to be a little bit more careful about because you're going to foreclose. So you want to make sure you're not sitting at a huge, like with these that you're going to foreclose on. Let me do this here real fast. These are not going to be the mod ROI. Okay, these are going to be more foreclosed. So let me do this. Let me just say, you look at these. If we take this and hit escape, we want to do what percentage will we be buying these at? Okay, so we take is equal to our offering and divide that by legal balance, probably. Most of these have some equity or negative equity. Like this one, you'd be buying at 69 cents on the dollar. So you're paying 69 cents of legal balance, okay? It's worth more than that. But then that's why you look at it, okay, and I would fade my bid down, or reduce my bid if it doesn't make sense. There's not much equity on that, so they only have 10 grand in equity on that one. It's worth 52. Okay. I think I might make my offer less than 28. I would go back and probably make my offer at 20 on that one, depending on the condition of the property. Okay. But yeah, if you foreclose, you're into it at 20. Well, the reason we want to look at clean assets and occupied assets is it makes a whole lot more sense. So let's look at one on here. I think let me look at one here. I think this one might make sense. 213 Brighton. Because here's the thing: if it's trashed out, you probably don't waste your time with it. Part of that's why we get rid of a lot of those vacant, unsecured ones. Okay. Oh, this is always a good sign when you get images of 213 Brighton, Boca Raton, Florida. So here we go. Let's look on this one real fast. It's off of realtor.com. Okay, great. Let's go over to realtor.com and take a look. Probably an older photo of this one, which is fine. But for our folks down in God's waiting room, 213 Brighton F. So this is probably one of those 55 plus communities. This is probably a condo. Yeah, 1 bedroom, 1 bath, 750 square feet. Yeah, it's probably in a condo. But what's great is when's this listed? When was this listed? Does it give us a listing date? Probably not. But we got all these great photos inside, which is awesome. The red couch. Come on, internet. Don't fail me now. It's trying to work. Come on now. Let's try something else. All right, let's just go up here to maps. Because it looks like it's a decent little, okay, we're happy with it. 230 Brighton. Oh, come on. Brighton J. Yeah, so it's gonna be down. That's one of these condo places. So we're actually, it looks like we're missing. Let me look at the spreadsheet real fast. What the spreadsheet says. 213 Brighton. It doesn't give us an FE or anything like that, but does give us the borrower's name. So we can always jump over to the county and take a look at it. So this is Dorothy Cornfield with a K. So let's go back here. What county is Boca Raton, Florida in? Palm Beach County. Okay. We gotta love Palm Beach. I bought plenty of non-performing notes in Palm Beach, Florida before. And always looking for more. Well, I mean, that's not at Cornfield. Where's this? Ooh, maybe she doesn't own it anymore. Deborah Cornfield, I said. Dorothy Cornfield, yeah. Dorothy Cornfield. No, I bet she lost it. Cornfeld, thank you. Cornfeld, not Cornfield. Thank you. Helps you spell right. Oh, look at that. Okay. Let's do Cornfeld, Andrew Clare. There's no Dorothy in there. Let's go back and try the address then. $213 Brighton. So you got, yeah, that might be 213 Brighton F. Let's see if that works it. Well, maybe Deborah goes by Dorothy. Maybe it's something else. Yeah, that's what I figured. I just figured it. Inserts the new address. Okay. There we go. Yeah, see, it's in different name. Okay. So look at this. Okay, so here you go, right here. We go back. This is what you gotta be worried about with condos. All right. So let's look at this one here. So when was the note created? Matured in November of last year. She hadn't made a payment since 2009. No, they did 92. Okay. Yeah. You know, double check this. That's why you look at taxes. So you see, it changed. So basically, Dorothy Cornfield here in 2009, last payment made. The condos, make sure you guys can see my screen here because it's important. Yes. So it looks like the condo's foreclosed on it for taxes back in 2016 for $13,100. And they sold it to Valencia Bojovic for $23,000 in 2016. And he's kept it then. He looks like a couple quick claim deeds to clean up the title or something like that. So this note is unsecured, so it's not even worth wasting your time on. So you make an offer, and you got to realize the fund doesn't know, don't keep track of everything. They're just selling off this stuff. So this one, you delete it off. So sorry, I get excited about that. It's gone. It's no longer available. And you just got to keep looking through them. That's what happens when you see a last payment that stuff. So that's why you just kind of start your way up here and work your way down. Like this FAS 254, Glendale, Montana, I'm just going to get rid of that. Unless you're out in Montana, I probably don't want to own anything in the neck of the woods. So for the most part, what I would do, and actually this is exactly what I'm going to do, I'm going to, I'll look at Ohio because I got some friends up there. Philadelphia, and it takes a little while to foreclose there. I don't know where Vandergrift, Winston-Salem, I'll take a look at that. Columbus, Ohio. Let's look at Maitland, Florida real fast, guys. And gals, sorry. Now, if it was worth 200 and I could pick that one up at 50 cents of that, yeah, it makes sense to foreclose and take it back and sell it either at the auction or sell it. If you don't sell it at auction, you take it back and fix it up and sell it as an REO or sell it on the MLS afterwards. So 107, this is from June 2019. I love those old trees, don't you guys, with the moss hanging down? That's basically killing them, but that's 49. We're looking for 107. I think this is it. Come on. Hopefully it's not this. I don't think it's that. Never a street sign when you want one, right? Okay, so let's use this for an example. Okay, it's a decent looking property for a couple years ago. Somebody's living in it. But go back to the spreadsheet on this thing. All right. So value is 168. It's got 50 grand in equity. Okay. Now making an offer, it means they owe 117. Okay. Making an offer at 54,000 if it's going to cost me probably $5 grand to foreclose. Let's see where they are in the legal. If they've done any legal on here. No bankruptcy. First legal action was started 2 years ago. So if I'm at 54 plus 5 is 59. It's occupied. I hopefully won't do that much work, but I could sell it at auction. My highest and best would be 117 at the auction. Okay. It's worth 168 conservatively. Can we say that? So I'd list it for like 100 at the auction. Let somebody take it off my hands. I'm into it at 59. I made $41,000, depending on what taxes are owed. And I'm sitting pretty good. Let's make sure. Let's look at one thing. Let's see what county Maitland, Florida is. This is in Orange County. Oh, so just outside of Orlando. Yeah, I would do this all day long. All right, so let's look here. I like Orange County. Think I might have found us a vacation home. Come on, Orange County. My computer's like, you've beat me too much today. Too many searches. All right, let's see if they still own this property. All right, I don't know if you guys were seeing it. Sorry. I just went to Orange County. All right, hang on here. Okay, so enter property address. Oh, look at that. 107. Is that right? I want to make sure that's the right address. South Calhoun Avenue. It gives me a good looking little photo here. See, that's a good looking little property. Look at that. You get a lot of pride of ownership in there. You got people sitting outside there. Okay. Yeah, I like that one. And the estate of Mitch Brinson. Okay, so it's the family hasn't paid on this. So go back to the spreadsheet here. Let's see, make sure that it's the borrower we're looking for here. Eva Brinson. Okay. Yep. So if they start making a payment to you, you're gonna make a 12% return, but you're gonna ask for extra because they have not made a payment. Their last payment was in 2016. It's been six and a half years since they made a payment. Yeah. Yep. And filed. No legal. Just started legal. Yeah. This is a slam dunk all day long. I'm gonna highlight that one for sure. Now don't be bidding against me now. Yeah. So 53. Yeah, I'd make an offer. I'd probably go 60 on that one. Boom. But do you get that? So let's see what we forgot. We were going to check taxes. My bad. Sorry. Yeah, they live there. Now, would I be willing to give them mod? Yeah, I'd be willing to make me some payments. I got to bring some tape. So they only owe $1,900. So they only owe basically for 1 year. That's not so bad. Yeah. And we go back here, new share, 6.5 years. So that's why they got a big legal balance there. But it's worth a whole lot more. So yeah, same thing. Depending on how old they are, maybe you could do a reverse mortgage, get some equity out of the deal, pay me maybe off in full, or at a reduced amount. Because if I get them to start making payments on this thing, what's their monthly mortgage payment? Let's see what their payment interest rate is. It's 7.6%, 552 a month. Yeah, they, you start paying me. Let's just say we bumped it up. Say start paying me $700 a month. That's $8,400 divided by $700 a month times 12 is 84. Divide that by our 54. That's a 15.5% cash and cash return. You hold it for a year, sell it off at 85 cents of the dollar. Yeah, you'd be sitting pretty good. Boom shakalaka. Yeah. I'm gonna do a trial payment. I'm gonna want to bring 6 months to the 4 months to the table at least. That's only $2,000 roughly, $2,500. I prefer $5,000. I haven't paid in 6.5 years. Okay. And that's a pretty good day at the office there too. If they come in and bring $5,000 to the table and pay $5,000 on top of their annual thing, that's doing really well. Okay. But that's a pretty Pretty decent deal there on that one. I wouldn't reduce it by taxes though, because there's so much of that equity above it. I just try to get it at 54 and be happy. Okay. But I got a good photo. I can market for it. I'm at 33 cents on the dollar, basically. Yeah, that's a slam dunk little foreclosure. You can mod it, make sense too on it as well. Keep person the property that makes sense. Any other questions, guys? We've been going for a while, and I think that we're about at the end of the promise to go to at least 3 o'clock, and I've seen people start to drop off here, but that's okay. But yeah, I know it's Friday. As we're recording this stuff, you guys have a busy weekend ahead of you. Got the Super Bowl, probably got a plan for going to that stuff. But you know, guys, hopefully this has been helpful for you. You know, it's helped me. It's helpful for me because it allows for me to kind of go through my due diligence. And yeah, exactly. Like D says, they owe about 40K for the last 6 years of payments. Yeah, if you figure, 6 times 6 is 36, and some late fees. They're 40 grand behind. So, of course, we want to make sure collateral is all good, that we have the right to foreclose. There's not been a reason they haven't. Have an attorney review the collateral file to make sure. Talk to the attorney that the file's been referred to, and see what's going on with that, and go from there. But hopefully, this has been valuable for you. We'll try to restream this again tomorrow. Thanks, Laura. I appreciate that, guys. As always, guys, if you'd like to get access to our tapes, if you'd like to be a part of our WCN crew, it's noteumbrella.com. Very easy for you to get to. We give you access to tapes. We give you access to training, classes. It's the biggest bang for the buck in the note industry by far, and our students kick ass and take names and close deals, because that's what we're all about. That's why we close notes, not we talk notes. So get signed up today, noteumbrella.com. Pretty easy. We'll add you to a Basecamp group, and you start looking at deals and get rocking and rolling. Okay. But once again, have a great rest of your week. What's left of it. Enjoy your weekend, and we'll see you guys all the time, everybody. Bye. Unless there's any other questions that anybody want to ask, I'll let you. Last chance for questions before I let you go for the day. I got a coaching call in 45 minutes with a student, and then we'll be doing this. Make sure to join us tomorrow morning, noon to 3 o'clock Central Standard Time. We'll be going through 60 performing notes on a tape as well. So, all right, everybody, thank you so much for the questions on here on Zoom, also on YouTube. Like I said, go out, take some action, and we'll see you all at the top, everybody.